Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you're new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating and a review if you can. This content is brought to you by Uphold, which makes crypto investing easy. You can buy, sell, trade, and earn cryptocurrencies on Uphold. It has 10 plus million users, 200 plus cryptocurrencies, and they're available in 150 countries. They also have precious metals and equities. So you can buy gold, silver, platinum, and so forth. And they have a unique feature where you can easily swap between crypto and precious metals and equities. So very cool. You don't have to transfer them to a native currency. You can just simply swap them. That's once again, a great feature that not many exchanges have. So if you'd like to learn more about Uphold, please visit the link in the description. All right, my friends, we got some very big news today. Moneygram, yes, the payments company, they have launched a new service which enables consumers to buy, sell, and hold cryptocurrency via the Moneygram app. My friends, payment companies, credit card companies, stock exchanges, banks will all offer crypto trading and custody. We are seeing the adoption, the building, and just massive integration of crypto. So they said this feature gives customers in nearly all US states the ability to trade and store Bitcoin, Ethereum, and Litecoin. Guys, this is a massive on-ramp. Now, I know some of you are going to say, dude, I'm not going to go buy crypto from MoneyGram. Yeah, you and I, who are the early adopters, we are the sophisticated crypto users. We understand hardware wallets. We understand self-custody. We understand different exchanges and liquidity and all that jazz. But there's a massive segment of the population which they don't want to learn that. They don't want to do it. And they're not going to do it, right? As I've talked about with ATM machines and Coinstar machines offering crypto, that is set up for different demographics and different people in the world who they don't want to go into the nitty-gritty of crypto. They just want to know, hey, I can buy it. So my friends, don't poo-poo this, from a personal standpoint, but look at the mass adoption of crypto. These type of moves, these on-ramps are going to help create that mass adoption. And of course, lead to higher prices. So once again, guys, credit card companies, payment companies, stock exchanges, banks will all offer crypto. And we saw PayPal really kicked off the payments platforms, right? Now you got MoneyGram. We just, of course, talked about MasterCard partnering with Paxos to help banks offer crypto to their clients. Also, Visa, due to some trademarks they filed, show that they're building a crypto wallet. And then Western Union is also looking to build a crypto exchange and their own token. So these are all information released from research, from filings, from patents and trademarks and so forth. So things are moving in the right direction. I know some of you are going to say, dude, what about the price? Why isn't the price pumping on this news? Well, you got to understand market cycles. We are in a bear market. There's not going to be any major news that pumps the market because it's risk off right now, and people are not paying attention to crypto right now. Institutions are adopting, but they buy OTC. They don't buy on the open market. And if they do, kind of like what Michael Saylor said, they buy in very small increments that it does not move the market. So we got to wait for the bull market to come back. This is our opportunity once again, another accumulation zone. We are near the bottom if we haven't hit it already. So I'm personally dollar cost averaging, accumulating, and I'm going to wait for that 2024 bull market, my friends. We may have some rallies along the way, as I've been talking about. Maybe we see something next year. And you can take profits there. You can swing trade it. But the big new all-time highs, the big money-making machine is coming in 2024. So big news here with MoneyGram, my friends. You should be excited when you see stuff like this. And if you'll recall, I had interviewed one of the representatives at MoneyGram about, I think it was a month ago. Let me pull it here for you guys. It was with Luther Madej, And yes, Luther Madej, let me pull it up here. And he is let me get his title here for YouTube. Pause here for me. He is oh boy, YouTube does not want to cooperate with me right now. He is the head of fintech strategy and innovation at Moneygram. And we talked about partnering with Stellar and having the USDC stablecoin on the rails there for people to move money that way. So guys, things are moving in the right direction. Exciting times ahead. Now, we have some crypto regulation related news here. Hester Peirce, who I've interviewed about maybe 3 to 4 times on this podcast, she was interviewed by Decrypt, and one of the takeaways from her interview, a really strong quote here: people have given up on us, talking about the SEC, because we haven't taken those steps to work in good faith. She's absolutely right. The SEC is moving in a shady, bad way, and people are afraid. They don't know what is going on. There's no clear regulations. And that's why I've been beating the drum since the Ripple lawsuit that we need Ripple to win, so the industry has the advantage here, because the SEC is going after everything. They're going after NFTs. They're going after Kim Kardashian. Everything's on the table here. And if it's low-hanging fruit and it could give them PR, they will do it. So Hester Peirce, she's kind of the only person there who's really fighting and pushing back. She's been trying to push her, clear guidelines and regulations like her sandbox proposal and all those things. But, Gary Gensler is in charge, and a bunch of other commissioners are not on board with clarity. They're on board with enforcement, regulation by enforcement, which is asinine. So here's some other quotes from her. What drove this initially was the feeling that crypto probably wouldn't stay around, Peirce said. Why invest the resources in developing some kind of framework for something that's not going to stay? So they were thinking crypto was going to be a fad. Well, it's not. Disruption's at your door. She said, typically when we write a rule, we go out with a proposal. People are talking to the regulator. We're talking to the public. It's a very healthy conversation. And, she continues. So she continues to highlight the SEC is not doing its job, clearly, right? And something else that's interesting here. So we got more amicus briefs being filed in the Ripple lawsuit. One of them is from the Crypto Council, and that is headed by Sheila Warren, who I've interviewed a couple times, and Eleanor Toretta, Fox Business, highlighted irony at its finest. Jay Clayton and Bill Hinman are now inadvertently supporting Ripple through their associations with Electric Capital. So Jay Clayton's an advisor there, and A16Z, Bill Hinman's an advisor there, which are both members of the Crypto Council. You can't make this stuff up, guys. You can't make this stuff up. Incredible what's happening. By the way, tomorrow, my interview with former SEC branch chief Lisa Braganza will be live. You don't want to miss this. We talk about Hinman, the ethics violations, Ripple, Grayscale. It's a good one. And this is from someone, once again, who was at the SEC, and certainly she's not happy with what she's seeing. And you just look at all the past SEC people, Joe Grunfest, Mary Jo White, Joe Hall, all these folks, they're calling out the SEC on their BS. Like, what are you doing? Right. So it's incredible that these former SEC officials are calling out current SEC folks about how they're handling crypto. Now let's move ahead. We got a Wall Street Journal article here about Celsius Network. So the headline reads, Bankruptcy Judge Advances Probe into Whether Celsius Operated as Ponzi Scheme. A court-appointed examiner and a committee of Celsius creditors will confer about who will lead an investigation into the crypto lender's use of customer money. So, of course, I know many of you still have your funds locked there. This really sucks. Obviously, these Mashinsky and these other guys really, really screwed this up and really hurt the market, put a stain on the market, because a guy of his caliber who, went around saying he was the founder of Voice over IP and so forth, and obviously he had some connections there, and he was running this business like a Ponzi, like Bernie Madoff, right? Really, really sad. And of course, look at Look at the exposure it's getting here in the Wall Street Journal. So hopefully, this can be sorted out where, many of you folks who are listening and watching, you're able to get at least some of your money back. I don't think you'll get 100%. Maybe you get 70%, right? But something's better than nothing. But it's really an unfortunate situation here. And I hope, the founders of Celsius, Mashinsky, and these guys get what's coming to them, because what we've learned, it's not just that, okay, the business, it had issues and it went out of problems. They knew about the problems and they were withdrawing their funds before they filed bankruptcy. So that is what I don't like. Businesses start up, sometimes some don't make it due to different situations. But if you know there's a problem, why do you keep telling people to put money in, which it was proven Alex was doing that while he knew the company was in bad shape. And then when they were about to say, okay, we're going to file bankruptcy, they all withdrew their funds. So classic rug pull, right, guys? And like I said, they deserve what's coming their way, and we'll see where this goes. Now, we got some good news here from Bitwise, and many of you may recognize the name. I interviewed Matt Hogan of Bitwise a few times. They're one of the institutional investment firms in the crypto market. So Bitwise forms active strategies team citing institutional demand. The maturation of liquid cryptocurrency markets has led index fund manager Bitwise to explore active strategies. So Jeffrey Park, who joined Bitwise in February, is set to lead the new unit, a spokesperson told Blockworks. Park was a partner focused on research and portfolio management at alternative asset management firm Corbin Capital Partners, where he worked for the last decade. Here's a quote. A new dimension of opportunity presents itself now as the market structure of liquid crypto has matured, Park said in a statement. We believe market-neutral yield arbitrage and quantitative strategies can be combined with top-tier long-oriented approaches to create unique absolute return opportunities. Vincent Molino, who has led and supported due diligence efforts at Northern Trust Mercer and Entrust Permel, is set to head operational due diligence for Bitwise Active Solutions after joining the company in May. Denny Peng joins Park and Molino as a risk manager. Peng was at multi-strategy hedge fund complex Millennium Management before joining Bitwise in September. Guys, I hope you see what's happening here. A lot of traditional financial folks coming in, joining these crypto funds, and they're building more complex products for the institutional investors, not retail, for institutional. That means more on-ramps for these big whales and wealthy individual, and that means millions of dollars and billions of dollars coming into the crypto market. And as you can see, it's a process. It's being built. They hire the people. They're setting up shop. They got to market that fund or that product, and eventually the money's going to flow in. This is why I can't stress enough being patient. There's a lot of moving parts here in the crypto market. We just talked about Moneygram, right? Where their on-ramp is for retail, but the on-ramps are being built for institutions as well. So, these big traditional financial players are still getting in. The new team will focus on multi-strategy absolute return solutions and seek to capitalize on market inefficiencies while offering low volatility. Bitwise hasn't explicitly announced the launch of any active managed funds that will be tradable on public markets just yet. So once again, guys, a lot of these things are in progress. But as you can see, building is happening. Building the highways and the off-ramps and the on-ramps and the service roads and so forth, right? For the capital to flow into the market. Now, here's a really great retail adoption of crypto. South African supermarket chain Pick n Pay now accepts Bitcoin payments. The retailer is taking payments from any Lightning Network-enabled wallet. So I don't know how many of my users are in South Africa, but if you know about Pick n Pay, definitely leave your thoughts in the comments. We'd love to know if you shop there, but this is adoption, my friends. The ability, the on-ramps for folks to be able to invest in crypto, and they offer them to spend that crypto and, of course, sell it. This is really great. So the payment method was tested in 10 stores over the past 5 months and is now available in 39 stores across the country, according to the Times. So they're using a Bitcoin enabled Lightning Network enabled app. So this is really great in adoption, guys. So here's a quote. The transaction is as easy and secure as swiping a debit or credit card. Customers can scan a QR code from the app and accept the Rand conversion rate on their smartphone at the time of transaction, a spokesperson for Pick and Pay said in the report, referring to South Africa's currency. The service fee for each transaction is minimal, costing the customer on average 70 Rand, I guess that would be, or about 4 cents, and takes less than 30 seconds, the spokesperson added. According to the report, Pick and Pay plans to roll out the payment method through all of their 1,628 stores over the coming months. See, guys, it's a process. It's going to take time, but it's happening. It's happening slowly but surely. And I think here in the United States, where I live, I think we're going to see a lot more supermarkets do this. Whole Foods and Walmarts and so forth. They're going to be building it, guys. It's not happening tomorrow, next month, but it's coming. They're all going to do it. Finally, GameStop has teamed up with FTX Exchange to offer exclusive FTX gift cards at select stores and online GameStop. Looks like here online at gamestop.com. Get a $20 bonus when you make your first deposit with a $50 FTX gift card. So I love partnerships like this and bringing, once again, the traditional industries into crypto. And FTX, they continue to build massive partnerships and do some really great marketing. So things all moving in the right direction, my friends. Very bullish outlook for the market. Once again, you look at the charts. I know it's painful. It's not much happening, but you have to understand market cycles. And we are in a bear market. But my friends, if you're patient enough, you dollar cost average, you will make money in the bull market. But you got to be patient. And also, heads up, I had published my interview with Anthony Scaramucci earlier today. If you haven't seen that interview, be sure to check it out. Anthony is obviously an institutional investor. He's invested in FTX, big fan of Algorand. He has his fund invested in Bitcoin. And we talk about a lot of different things. So be sure to check that out. All right, my friends, that's the news. Let me know what you think. Leave your thoughts and comments below. Share this video and podcast, and I'll talk to you all later.